I'm just calling him. Yeah. Welcome back everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, the good times continue to roll on for the bulls on Dalal Street. For the second straight day, it looks like we're going to end on a positive note. But of course, there are still doubts out there. There are still skeptics out there who do not believe that this pullback is sustainable.
One of them is sitting right next to him.
Exactly. And if you look at the setup at this point of time, well, clearly the Sensex and Nifty are going to end higher, probably towards the day's high. If you look at some of the gainers out there, banks and IT are the one who are driving it. Now, is it because the market now believes that IT and bank earnings would be the best out there, sectorally speaking? We'll wait and see. But on the laggard side, there's clearly energy stocks. I mean, the ONGCs and RILs of the world are the big laggards on the benchmark indices. But crucially for me, Santo, it was a fear gauge. I mean, what that is indicating is very important because the India VIX has hit a 1 month low today and has finally, fallen below the crucial psychological level of 20. So clearly, the bulls are increasingly taking charge of this market, and we will have to wait and see if there's a comeback from the bears.
Well, I know, CJ, you're getting pretty excited about this uptrend over the last few days, but here's what I think, we're not seeing strong institutional inflows yet, particularly from the FI side. So unless you see that, it's very hard for this market to go up. There will be the occasional pullback, but that's just about it. Secondly, when it comes to earnings, market still seems to be penciling in EPS of around 800 odd, estimates vary between 800 to 820. So that still makes it this market at 20 times forward earnings in a very completely changed macro environment. That I would think is a little stiff very clearly. And lastly, I'm more or less convinced that this is a bear market rally more than anything else. Well,
I think Santo, just before we move on to our stock section, I think one point that intrigues me is that somebody told me that if you look at the Nifty from dollar perspective, right? Of course, the fall in dollar terms has been double of what we have seen in rupee terms. And from FIS perspective, given the depreciation also in the rupee in the same time, possibly Nifty might start looking cheaper instead of expensive. I mean, one of the biggest argument against the Indian markets has been the fact that they are very expensive, but maybe maybe there is some turnaround on that side. But that will be my only counter to the fact that institutional investor, money has not been as strong as probably we would hope for.
Well, with that, let's just quickly move into the stocks on our watch list today, starting with Adani Wilmar. CJ, now the stock was a major outperformer, for the first 2 months.
Outperformer is,
it's an understatement. It was just a one-way ride all throughout. But now that changed slightly after the company reported its fourth quarter earnings, when you actually saw a degrowth. And now again, things are not looking quite good. The company spoke to CNBC TV 18 today and mentioned that they've taken a price cut of about 15% over the last few weeks, and they will continue to
sort of forced to. I mean, with the government diktat also coming
in
for edible oil producers to probably take price
more
cuts.
Worrying is the fact, CJ, that the company's admission that overall volumes for the industry itself has not grown during the quarter. So you had a disappointing fourth quarter. Probably you could see a disappointing first quarter as well. So that makes me worry about this stock.
Yeah, clearly, Santo. I mean, the near-term headwinds are, too much. I mean, at one point of time, you remember when in March and April we were talking about it, it seemed like Adani Wilmars of the world were a good bet to make given the way edible oil prices were going. But now that government intervention has happened, this is another sector that has been affected by the sort of intervention we are seeing in the government across the sectors to tame inflation at this point of time. And for me, I think the longer term story still remains quite strong. It's not like, consumers will stop consuming edible oils. Clearly, as, the national income keeps on rising, as there's more urbanization, you will see demand for edible oil continue to rise in this country. So clearly, it remains a longer term structural story. Apart from that, Adani Wilmar individually, Santo, I think probably is a more safer bet in this industry given its dominant market share, given the fact that, it's been gaining market share from a lot of unorganized sector as well. So clearly, for me, Adani Wilmar would probably be an attractive bet given the recent correction. A lot of long-term investors will start looking at the stock and thinking, maybe the valuations are attractive now. Well, another stock where valuations could be attractive, and we saw a good move today on this counter, is Tata Motors. Well, why the move today? The reason is, you have to look up north in China. Authorities there have vowed to revive the car market, which has been battered by COVID, the economic slowdown in that country. Now, the argument here is why, how does China affect Tata Motors? Well, JLR, which accounts for almost 85% of Tata Motors EBITDA, that gets almost 30 to 35% of its sales from the Chinese market, Santo. So clearly, a revival here would be very positive for JLR's volumes. And I feel that if this comes through and, if you see the Chinese market reviving, probably this could trigger a re-rating on a stock which has been down and out for the past 6 to 7 months.
Well, CJ, the re-rating seemed to have happened between March of 2020 till about, last November or October when you saw a steep run up.
But we have also seen a fall also, no? Since October. I mean, the stock is almost down 20,
Exactly.
20,
See, there was a re-rating. Now the market, I think, is A, losing patience, and 2, it wants to see some money. It wants to see something on the bottom line there. The company has been making losses for far too long. Look at it whichever way, standalone
that is
or,
true.
It's been kind of a theme story. Well, it's made a good comeback in the passenger car segment. Now the CV cycle is beginning to look up, but somewhere the numbers are not adding up, and this is where I think market is losing patience. If we look for this year, 2022 so far, Tata Motors has been a clear laggard. So I think till you see some indications of profitability, I don't think.
I think the numbers will come the moment JLR turns around, and hence my argument that if we see the China business performing for it, even though there are fears of slowdown in EU and the US market, I think then probably you could see the re-rating happening, because of course the India business is doing well. So you have one lever already working well, and if the second bigger lever works well for Tata Motors, then probably it's gold.
Well, one last point there, the debt has really become
But they are planning to go net debt free in another 2 years. So I think
when that happens, investors too will follow. Well, Godrej Consumer Products is the next stock on our watch list now. Big rally in the stock over the last week. Stock has risen around 17%. Now, Godrej Consumer Products is clearly one of the beneficiaries of falling palm oil prices, because it's one of the major raw material ingredients. Also, the company was on the CNBC TV 18 channel today, and it is said that it expects to report double-digit growth for this year as a whole, and it also sees volume growth picking up during the later half of this year, CJ.
Well, quite optimistic, Santo, given the way the FMCG market has been performing the past 12 months. But clearly, I think the biggest dark cloud over Godrej Consumer, and not only Godrej Consumer, but the entire FMCG pack would be the rural demand and the demand scenario right now. If you look at Godrej alone, brokers are expecting almost a 5 to 6% year-on-year decline in volumes in the first quarter, and this picture will likely continue in the second quarter. I think the benefits, probably what market is expecting, is that maybe the second half of the year could be better, at least on the margin front, if not on the volume front. But yes, I think from me, even if the margin front has improved, volumes will remain, a big question mark going ahead, especially given the sort of, anecdotes that we are getting from the rural side, that unemployment there has risen, demand there is not picking up pace in the way that a lot of people would like. So clearly for me, I think the argument on the volume side is what is negative at this point in time for the stock.
Well, now the story about Godrej Consumer Products is changing. It's not just an India story, it's also an Indonesia and Africa story.
Not that Indonesia is doing that great, is it?
Well, it is not doing well for now, but clearly I think the company is making the right moves there, so it's a matter of time before the tactics start paying off.
Well, one stock where there is no matter of time, you don't have to wait for the gains to come, is Arihant Superstructure. Well, what a move on the stock today. The stock rose about 10% in trade after a very strong business performance update for the June quarter, which is likely to going to drive the stock at least for the coming few weeks. Now, look at the numbers. Sales value surged by 86% on a year-on-year basis in June quarter. You had the volume or the inventory that they sold, about 119% jump there. Collections also saw a jump of about 17% on a year-on-year basis. So all the metrics that you would track in a real estate firm, clearly showing a very, very strong growth environment. And I think going ahead, clearly the market will start building up expectation of a blockbuster earnings, because the business updates clearly suggest that we are in for a bumper quarter.
Well, CJ, I don't know how you came upon this stock. I'm really surprised here. Okay, the run-up partly can be explained by the fact that low volumes, small cap stock, and
it is a small cap stock, true.
So not really a tough thing to get the prices up quickly there. Now look at the numbers in perspective. Now all real estate companies, big and large, they had a bad 2021, but 22, most of them, nearly all of them, came back with very strong numbers. In the case of Arihant, it's not been the case. Sales are down about 50%. Now, when you say that for the first quarter that there has been a huge jump, 86% and all, again you will have to look at it on a very low base, because last year sales were almost half, right? And even that's not the worry. The bigger worry for me is, look at the balance sheet numbers. I mean, look at the receivable days, which is almost about 6 months. Look at the inventory, it's there, Inventory was some 4,000 days and it's still come down to about 1872 days, which is also very, very huge, which almost saying that they've got 5 years of inventory to clean up before they can,
That is true. I mean, Arihant has been almost like any other, real estate company. The story is almost same for the past 8 to 10 years. High inventory is what has plagued the real estate sector for the past 5-6 years.
Massive inventory, CJ.
True, of course, and I think probably the numbers also suggest that they're trying to get that inventory down. I think, of course, project launches and all will not be the driver right now. I think the main driver is that inventory is coming down, and balance sheet probably will become healthier as the quarters go by.
Well, one real estate company where none of these problems exist as of now is Sobha Developers. Again, very strong numbers update for the first quarter.
Very strong.
Almost on every parameter. Now it had record volume. About 1.36 million square feet was sold. Then also sales value at about 1145 crore, which is the highest. That's a jump of close to about 68%. And more importantly, the average realization that has climbed to about 8,431 rupees per square feet.
I think this is second quarter in a row.
Yeah, in a row, and it's up 10% year on year, and also it's up close to about 3-4% quarter on quarter. So there's improvement on almost every single parameter, and the market seems to be taking note of that. If you look at the jump in the stock price over the last 3 weeks or so, the stock has risen 25% now. That's quite a huge jump. Now this is a case where company is reporting good numbers, and the market is taking cognizance of it. So,
yeah, clearly, Sato. I mean, you can't deny, you can't have an argument against numbers of that nature. But I think the only caveat that I would want to put on Sobha is the fact that, of course, I think Bangalore is where the dominant market is, if I'm not wrong, right? And I think probably the only thing would be that if IT wages start to slow down going ahead, if the growth in IT wages start to slow down, that could put a bit of a dampener on the demand side. But of course, this is something that could happen maybe 12 to 18 months down the line, not immediately, but that would be my only caveat on the stock. But apart from that, of course, things are looking quite pretty. some may question whether most of the upside has been had, whether we have seen the best of the returns on the counter. But clearly, if the quarterly performance keeps on coming in like this quarter after quarter, I mean, even the the most skeptic of investors out there would have to probably hand it to the
and a couple of other points that the company made is that it has been taking calibrated price hikes, and also
I think it's one of the very few. I think probably Godrej Property is the only one who can, in the listed space, match Sobha in terms of being able to take price hikes. Given that the market is good, right? Real estate market is hot, but it's not that hot that property developers can take price hikes at this point of time.
Well, and let's take a quick look at the market
before
we wrap up the show. Market continues to show strength there, and Nifty futures are also quoting at a 10-point premium to spot. M&M big gainer today, ICICI Bank, IndusInd Bank. Good day for bank stocks as well, CJ.
Yeah, absolutely. As I said in the beginning of the show as well, it's the IT and banking names which have been driving the market today. Even in the mid-cap space, and to look at the gains, about 1.4% jump in the Nifty mid-cap 100, so clearly outperforming the benchmark, as well as the Nifty small cap 100 as well, higher by about 1.6%. So clearly it is the mid and small cap which are leading the rally at this point of time. They are the one who are leading the pullback, and this is something that I had suspected a week or so ago, because Santo, I had written about this not so long ago, that small cap discount to the Nifty is probably the widest it has been in 2 years, right? At this point of time, on a 12-month forward earnings basis, the Nifty small cap 100 was quoting at almost a 20-22% discount to the Nifty 50, and whenever the discount has reached a 20% level, it has tended to give a very good pullback in the next 12 to 18 months. So clearly, maybe a lot of fund managers out there, a lot of smart investors out there trying to take opportunity of this technical situation, and maybe are expecting a good bounce back in the small cap space.
Well, you know what, CJ, I've always been slightly skeptical about this earnings estimates for small cap at an aggregate level. You could have that for a few companies. The universe out there is quite vast.
I mean, we are only talking about 100 companies on the Nifty Midcap 100. Of course, beyond that, you have another 400, 500, 600 or so.
Exactly. So,
but that, I mean, there would hardly be any coverage there. But I'm only talking about the 100 companies that are part of the Nifty Midcap small cap 100 index.
Well, CJ, so what should we be looking for in
Well, Santo, I think one data point that we need to look out for is the initial jobless claims data for the month of June in the US. That will be coming out later in the evening, as well as there are a few Fed members or the FOMC members who are scheduled to speak later in the evening. So their commentary will also be, so you will have a run-up of a lot of these speeches coming up in the days ahead as we prepare for the next FOMC meeting. And important bit would be the commentary around rate hikes. I mean, a lot has changed since the last monetary policy meeting of the Fed. Let's see what they have to say, whether there is some tempering of rate hike expectations, or whether they will stick to their guns and suggest another 50 to 75 basis point rate hike. That's one thing. The other thing, of course, TCS is going to kick off the earnings season. The Q1 earnings season will start officially from tomorrow. When TCS reports its number, they will be reporting the number after market hours, but you can expect a lot of action in TCS as well as the wider IT pack tomorrow.
Well, thank you, CJ, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do let us know about your feedback on the show. Paste it in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to Moneycontrol.com and download the Moneycontrol app. We'll catch you live again sharp at 9 AM tomorrow.